Busy morning on Wall Street and in Chicago. Let's get to the CME and Rick Santelli. Hey, Rick.
Hi, Carl. Today, we're going to talk about the great taper caper. What's up, Dr. Bernanke? I really want to know. I want to know what's up. It's so hard for me to get my arms around this. I remember when all the boys on the trading floors were poring over charts and companies' balance sheets and earnings and all the fundamental metrics. But is it your birthday? Yeah. Happy birthday, but I am going to steal a flower. You know what it's like now? It's like to taper, not to taper. To taper, not to taper. Or, if you're a saver, he hates me, he really hates me. He hates me, he really hates me. Or if you're a stock trader, oh, he loves me. He loves me more today. He's going to love me more at the end of the year. He's going to love me for years. I don't know. It seems a little bit ridiculous to me. Yesterday, we ran it twice today. Ben Bernanke had a quote, and I'm going to read it. We're not going to show it on the screen. Currently, we have an unemployment rate of 7.6%, which I think, if anything, overstates the health of the labor markets. Let me get this straight. It overstates the health of the labor markets. How many times have you heard Ben Bernanke say, I have to do all this because the guys in Washington are horrible? Okay, then I think of this. I think of November elections. Where was Ben Bernanke with that comment? I will tell you what, many of my friends voted because the economy was getting better and the unemployment rate was going down, but it really wasn't real. But what did we get from Ben? Absolute and utter silence. I think that's a bit disingenuous personally. All right, now let's look at this. When we all talk about the taper, it's all about interest rates to some extent, and many say, well, listen, stocks are doing great. It really isn't about interest rates. All right, so I'll take the interest rate effect, and I'll concede that. Let's say interest rates make no difference to this equation at all. So what are we left with? We're left with corporate profits. And even though this is a hand-drawn chart, look it up, it looks pretty darn good. Corporate profits are huge. They're huge. So let me think. An indicator of the economy, the interest rate thing he's doing really doesn't matter. Well, then, if this is a good indicator of the economy, why is he still hanging around with these programs? All right? Well, he wants to target the unemployment rate. All right, now let me get this straight. Corporate profits are going through the roof, and he's targeting unemployment, which, if you look at the employment per population, is at a 30-year low. Gee, where's the correlation there? Or maybe the interest rates are benefiting the Treasury, who has boatloads of debt. Maybe this is something the eyeballs should pay more attention to. Back to you.
I think I see next week's cover of Business Week. Rick Santelli from Chicago. Thank you very much, sir.